U.S. corporations like Apple have been slammed in the media recently for trying to use tax loopholes in Ireland. Joining me today is the CEO of IDA Ireland, Barry O Leary, to talk about these tax loopholes and if there are any changes in the future. Thank you so much for joining me. It's a pleasure having you here, coming all the way from Ireland to come to New York City.
No, thank you for having us here.
Yes,
today.
Absolutely. So the corporate tax rate in Ireland is 12.5%, whereas in the U.S. it's about 35%. Is that why Ireland is so attractive to foreign investment?
Well, I think you need to disconnect the two, because people coming to Ireland are coming to service the European market. It's not a question of moving from A to B. You know, they'll stay present in the United States servicing the US market, but they'll come to anywhere in Europe. So the competition we would have would be against other European countries. We do have a 12.5% corporation tax. We've had it for a long, long time. It's been very, very successful, and we will continue to have that advantage.
Right, so Apple has been kind of called into question recently about trying to use different tax loopholes. Are they actually doing anything wrong?
Not at all, to the best of our understanding, and I wouldn't refer to any particular company, because as it happens, Apple is in the news just because of the Senate hearings, but you know, you have had the situation in the Netherlands with Starbucks, in Luxembourg with Amazon, but all of these companies are taking advantage of the rules that are available internationally. So I think that's the important thing. They all are following the letter of the law.
Right, that's really interesting. That was going to be my next question. If there is any sort of disconnect between national and international tax laws, because if Apple isn't doing this in Ireland, then they can easily go to another country and do that as well.
Yeah, sure, there is a mismatch between national and international. It is the subject of much discussion. It is an incredibly complicated area, but there are moves on in the OECD 20 to see whether there can be some form of uniformity brought into the global corporate tax system, but I wouldn't underestimate the challenge that there is in relation to that.
And recently there was the G8 summit about a week ago, and they tried to talk about these different tax loopholes, and as part of the G20 coming up, they want to talk about multinationals where they would be obliged to declare how much tax that they pay in each country. Do you think that will actually end up happening?
I don't know really. Apparently there are over 3,000 double taxation agreements in existence around the world. You know, some people have been saying, some countries, if you're active in our country, that's where you pay the tax. But what happens in the case of a very practical example, Boeing in the United States selling about $10 billion worth of aircraft in Ireland to an Irish airline, Ryanair? Are they going to be paying the corporation tax on their profit there? I think not, by the way. Likewise, in Europe, you have Airbus, which is made up of at least 3 or 4 different countries. One country makes the wings, another the main fuselage. They put them together, they sell them to South Africa. Again, where is the tax base? I'm illustrating that. That's a simple example of just how complicated things are in the tax arena. But I do think that the jurisdictions that have 0% tax rate, that don't have substance in them, I don't see them surviving in the medium term.
So some people try to say that Ireland is a tax haven. What would you say to them? Well,
factually that's incorrect, and also by the OECD definition. I think what differentiates Ireland is the sheer substance that we have. You know, many of the companies in technology and life sciences and financial services and digital media, they have thousands of employees in Ireland, and they're carrying out active businesses, in many cases the headquarters for Europe or Europe, Middle East and Africa, or their operation centres. So, you know, that doesn't fall into the definition of a tax haven.
Now, moving over to Ireland and its economy, it was one of the first countries that was hit after the financial crisis. How is Ireland doing now?
Well, we've had 5 tough years, really tough years, particularly the last 3 in terms of austerity. We're in the financing package that we have with the Troika, the EU, the ECB, and the IMF. And as part of that agreement, we have to reach a budget deficit of 3% of GDP by 2015, and we're making good progress in that context. Our exports are growing. We have small growth in the economy, but that's at a time when practically nobody is growing in Europe. and we have a growing amount of foreign direct investment that's actually driving our export performance. So there are a number of things that are moving in the right direction, but there's still a couple of hurdles to go.
And interesting that you brought up exports. With China and their manufacturing kind of having some problems right now, their biggest exporters are the US and Europe. Is Ireland having any issues because of that?
Yeah, I think the most important thing from an Ireland point of view is that there's a strong European market, European demand, because after all, that's what happens with most of the foreign direct investment. They're coming to Ireland to service the European market. Now, of course, the European market has been very flat for the last couple of years, and that's not a good environment for winning foreign direct investment. However, the sectors we're in, in particular the technology and the life sciences area, there's great innovation, new technologies, new products coming out. I think that's why we've still seen an increase, even though the overall market is actually in trouble.
You are the CEO of IDA Ireland, so what are you looking for to come to Ireland right now for foreign direct investment?
So there are a number of key sectors that we're after. The life sciences, which includes the medical devices, pharmaceuticals and biopharmaceuticals. That's a big part of the business. The technology sector, anybody from an IBM to a HP to an EMC. The financial services, somebody like Citi or State Street, or the digital media, digital content, the Googles, eBays, PayPals, Yahoo, Twitter, we have all of those. And in the food industry as well, particular areas like nutritionals. They're the 5 key areas where we've built up a lot of expertise, we've built up a lot of clusters, we've very, very highly educated workforce, and when you maximize the benefits of having that great workforce with some of the fiscal advantages and the strong track record we have over many, many years, I think we're beginning to see the flow of foreign direct investment really solidifying in Ireland.
And finally, what do you want to happen next for IDA Ireland?
Well, for IDA, actually, it's a constant evolution. If you take it 20 years ago, the biggest foreign direct investor by way of jobs or employment was Fruit of the Loom t-shirts. They'd over 4,500 people. Intel were only breaking ground on their new fab in Ireland. Today they've over 5,000 people there. But new areas that we're going into like analytics, big data, the cloud, mobile, social. Really, it's a constant every year looking at what's coming new and where is the match between what Ireland's capability is, what the multinationals are looking for, and we're active, with the large multinationals, the mid-tier, and then more importantly, in recent times, these emerging young companies that will be the Google and the Facebook of tomorrow.
Well, thank you so much for joining me. It's such a pleasure speaking with you.
Thank you very much for having me here.